The phone buzzes face up on the counter and the bank has already pushed the line to your lock screen. Overdraft fee, $35. 2 seconds ago, the card reader flashed a green approved and you breathed out. It was a coffee and bagels run for the office, $23.80, and the account was thin, and the machine said yes anyway. That yes is what cost you $35. Not the bagels, the yes. Diana caught the same buzz this morning, at the same kind of counter, and she can walk you through the whole thing, because the bank has run this exact play on her for years. Here's the part that flips it, that $35 wasn't a punishment for messing up. It was the product. The bank didn't fail to stop your overdraft, selling you the overdraft as the business, and that business pulled in an estimated $12.4 billion from Americans last year. And the cruelest detail is that you agreed to it, not in some fine print ambush. You opened a checking account at 19, clicked yes on a screen you scrolled past in 4 seconds, and bought yourself a lifelong subscription to $35 coffees. Alex did the same thing freshman year and didn't find out until the third fee. If your stomach just dropped, that's recognition. You've lived this. You just never had a name for the machine doing it. So before you blame yourself, this is a 5-move play, and there's an off switch they're hoping you never find. An overdraft fee was never a penalty you earned for being bad with money. It's a product, sold hardest to the people with the least, and switching it off is free. Move 1, the courtesy. That's not our word for it, it's theirs. Banks literally branded this overdraft courtesy, a favor for good customers who occasionally ran a little short. We call it the courtesy fee because the courtesy runs in exactly one direction. Here's the supposed favor. Your account had $12, the run was $23.80, so you were short $11.80, and instead of declining the card, the bank covered it and charged you $35 to lend you that for about 4 days. Run it as a loan, which is what it is. The FDIC did, and on a small overdraft like this, paying a $35 fee to clear it works out to an interest rate of around 3,500%. A loan shark charging that would feel like he was being a little generous. And notice the sleight of hand. Nobody asked if you wanted a $35 loan. If a friend covered your $12 tab and then demanded $35 back by Friday, you'd stop calling him a friend. The bank covers it without asking, names itself generous, and mails the bill. At Mr. Sense, we spend way too much time reading the fine print banks hope you skip. So if you've ever felt grateful to your bank for helping, then notice the help cost more than the thing it helped with. You're in the right place. We break down one money trap every other day, so you start seeing them coming. Move 2, the reorder. This is where the favor stops looking like an accident. There's a face behind it. Call him the bank manager, not a mustache-twirling villain, just the person whose job is to keep this number climbing. For years, when several charges hit on the same day, banks didn't process them in the order they actually happened. They processed them biggest first. Why would the order matter? Picture a Tuesday. You've got $100 in the account and 4 small charges. $8, $12, $9, and $7, plus one big one, a $110 car payment. In real-time order, the 4 small charges clear and only the car payment overdraws you, 1 fee. But run the big one first, and it drains the account. So now all 4 little charges bounce in behind it. 1 overdraft just became 5. This isn't a theory. Wells Fargo did exactly this, and it ended up in federal court. A judge named William Alsup read the bank's own internal memos and ruled that its motive for posting biggest first was, in his words, to maximize the number of overdrafts. One of those internal memos had even forecast the reordering would bring in tens of millions a year in extra fees. He ordered $203 million paid back to about 1 million customers in California, one of whom got hit with 4 separate $22 fees instead of 1. So the reorder was never a glitch in the system. The overdrafts were the revenue. Your groceries were just the delivery mechanism. Move 3, the stack. Once 1 fee can quietly become 5, a single thin day gets expensive fast. 5 overdrafts in 1 day at $35 each is $175, often on a handful of purchases that, added together, cost less than the fees did. And the charges that set this off are tiny. The CFPB found the typical debit card overdraft is triggered by a purchase of about $24, the same small coffee and bagels run from the top of this video. Diana's version was a Tuesday, a $6 school lunch top-up, a $4 coffee, a $9 prescription copay, and the gas to get to work. 4 little yeses, each one its own $35 fee, $140 gone before the big charge she was actually worried about had even cleared. You don't have to be reckless to get stacked. You have to be a normal person with a normal small charge on a normal thin Thursday. For a service the bank markets as a courtesy, charging you $175 to spot you. A few small purchases is a fairly aggressive definition of the word. Move 4. The machine. Add up every one of those small charges across the whole country, and overdraft stops being a fee and becomes an industry. In 2025, Americans paid an estimated $12.4 billion in overdraft and bounce check fees. One more time, slower, $12.4 billion. It's an estimate, built up from the biggest banks' own filings. But every serious tally lands in the same neighborhood, north of $12 billion and climbing. Where does it go? Chase alone pulled in about $1.1 billion in overdraft revenue last year. Wells Fargo, $924 million. For some banks, that isn't a rounding error. It's a line they mention on the earnings call. And the money arrives the second a bank decides to charge. USAA only added overdraft fees in late 2023, and its overdraft revenue jumped 471% almost overnight. Here's the detail that should make you angriest, and it's the part that never makes the brochure. By the government's own count, these fees fell by more than half between 2019 and 2023, from around $12 billion down to under $6 billion, back when banks were under public pressure to cut them, which proves it's a choice, not a law of nature. Then the pressure came off. In 2024, a federal rule was finalized that would have capped this fee at $5 for the biggest banks. $5 instead of $35. It was set to take effect in October 2025, and then Congress voted to kill it, and it was signed into law that May. The cap that would have saved overdraft-paying households about $225 a year never took effect, and the fees climbed right back. So, congratulations. By covering a coffee you couldn't quite afford, your bank has enrolled you in its most exclusive rewards program, the one where you pay them. Move 5. And this is the one the whole video has been walking toward. Who actually pays? Because $12.4 billion is not spread evenly across everyone with a checking account. It's the opposite. The CFPB found that 9% of accounts pay 79% of all these fees. 9%. Read that as people, not a percentage. A small group of the most stretched accounts, the ones whose balance at the end of the day is usually under $350, is carrying nearly the whole load for everyone else. And it lands about where you'd guess. In the Federal Reserve's 2025 survey, 12% of people with a bank account paid an overdraft fee. But among black account holders, it was 25%, against 8% of white account holders, and it climbs as income falls. 17% of people earning under $25,000, 20% in the band just above. The fee finds the thinnest accounts and stays there. That's Diana. She is not careless. She runs a budget tighter than most people watching this could survive. The CFPB says people in her spot pay around $380 a year in overdraft fees, and the hardest hit average 37 separate fees, closer to $1,300. And remember who Diana is. A single mom whose rent eats most of a paycheck, who, like the lower-income renters in the Harvard housing study, is left with a median of about $310 at the end of the month once the rent is paid. $310. That's the entire cushion standing between her and a $35 fee. She's not the exception either. 62% of American adults live paycheck to paycheck, and among people earning under $50,000, it's 77%. Diana is the median. So picture her year printed as a receipt, with one subtotal at the bottom. $380. Now look at it one more time, because $380 is almost exactly the $400 emergency that more than a third of American adults say they could not cover. The fee isn't the thing that happens instead of the emergency. For Diana, the fee is the emergency. She survived a layoff and a winter rationing the heat, and the thing that keeps knocking her down is a debit card that was $12 too optimistic. Somebody watching this knows the counter-argument by heart. Just don't overdraft. Watch your balance. Nobody forced you to spend money you didn't have. That's on you, not the bank. The strong version of that is real, so let's give it its due. Since 2010, a rule called Reg E means a bank legally can't charge you an overdraft fee on a debit card or ATM purchase unless you specifically opted in, so a free alternative already exists. Don't opt in, and the card simply gets declined, no fee. Surveys back the bank's side too. An American Bankers Association poll found about 70% of people say their overdraft protection is valuable, and 68% think the fee is reasonable. A New York Fed study even found that capping these fees can backfire. When caps got tight, some banks pulled back on offering accounts to riskier customers at all. And a $35 overdraft can genuinely beat a payday loan, where the typical borrower pays $520 to borrow $375. Here's where it falls apart. The people paying are not the careless, they're the constrained. There's a well-known study in the journal Science where researchers found that the mental strain of being short on money measurably lowers your cognitive performance by more than pulling an all-nighter. The exact mental bandwidth you'd need to track a low balance is the bandwidth that being broke eats first, which is precisely why the lowest balance 9% of accounts carry 79% of the fees. So the decision rule is simple, and it costs nothing. If your balance ever runs thin, flip one switch today. Opt out of debit overdraft. And the worst the bank can do is decline a coffee instead of charging you $35 for it. So let's end the play. 3 switches, not 15 steps. 3. Switch 1 is the free one, and it ends this today. Opt out of debit card and ATM overdraft. Open the app or call the bank, find the overdraft setting, and turn coverage off. From that moment, a charge that would overdraw you just gets declined. A 5-second no at the register instead of a $35 yes. That's the off switch the whole industry is quietly hoping you never flip. One honest catch, because we don't sell magic bullets here. Opting out covers your debit card and ATM swipes, the everyday spending, but not your checks or your automatic bills, which can still overdraw. So it's not a force field. It's the single biggest leak, sealed in 2 minutes for free. Switch 2. Move your money somewhere that doesn't run this play at all. There are now more than 500 bank-on certified checking accounts at big names and regional banks alike, built to a standard with no overdraft fees and a monthly cost of $5 or less, and more than 14 million of them are already open. Or move to a bank that scrapped overdraft fees entirely. Capital One, Ally, Citi, and American Express all did. Frugal Frank switched 2 years ago, and his bank can't charge him an overdraft fee because it doesn't have one. He didn't get richer overnight. He just stopped paying a fine for being human. Switch 3 for the honest mistakes. Link your checking to a savings account so a shortfall pulls from your own money for free instead of triggering a fee. And turn on low balance text alerts so you see the cliff before you walk off it. A lot of banks now also build in a 24-hour grace window. Chase calls it Overdraft Assist. Wells Fargo calls it Extra Day Grace. PNC calls it Low Cash Mode. That gives you until the next day to cover a shortfall before the fee lands. And if you already got hit this month, call and ask them to waive it. Most banks will reverse a first fee as a one-time courtesy. Funny which direction the courtesy runs once you're the one asking. Step back and look at the whole play at once. The courtesy that costs more than the thing it covers. The reorder that turns one fee into 5. The stack, the $12 billion machine. The cap that got killed the moment the fees started falling. Every move points the same direction. At the thinnest accounts, the people the system already squeezes hardest. That's the thing to carry out of here. An overdraft fee was never a penalty you earned by being bad with money. It's a product, sold hardest to the people with the least. And unlike almost anything else in your financial life, the off switch costs nothing and takes about 2 minutes. So the next time the phone buzzes face up on the counter and the screen says approved, you'll know what that green light is actually offering, and you'll already have turned it off. The coffee gets declined, you grab cash or come back tomorrow, and the $35 stays exactly where it belongs, in your account. If this is the leak in your life, the next one to watch is the skim, the same quiet trick. Run on your retirement account instead of your checking. Got an overdraft story that still makes you angry? Drop it in the comments. We read every one, and the worst ones become the next video. If this changed how you see that approved screen, hit like. Subscribe if you're ready to stop making your bank's shareholders richer than yourself. And ring the bell so the next trap we break down doesn't slip past you. Banks still pulled more than $12 billion in overdraft fees in 2025, after the cap meant to stop it was killed. The least you can do is make sure you're not one of the dollars.